Everyone thinks that NFTs are dead and meme coins, they're just gambling. Well, that last part's probably kind of fair, actually. But what if I told you that I think the biggest opportunity in the next few years in crypto is a bunch of cartoon penguins? Look, I know how it sounds. I normally don't talk about NFTs and meme coins because I care about things that generate value and are real financial assets. But Pudgy Penguins is kind of that in an adorable, sneaky little wrapper. Yesterday, Pudgy Penguins launched their Pengu, supposedly meme coin token, and is trading at about a $2 billion valuation. And I think that might actually be dramatically undervalued for a number of strange reasons. So today we're diving into why those waddling pioneers might be crypto's best chance at mainstream adoption, and why their new blockchain Abstract may be positioning early believers for one of the largest wealth transfers in crypto that we've seen in a decade. So grab your coffee, hide your wallet, and let's figure out if these penguins are the future or if I've finally lost my mind. Let's start with some tough love. Most NFTs and most meme coins are garbage. Look, even if you like meme coins and NFTs, 99% of them go bust, are absolute rubbish, will go nowhere. That's the reality. But beyond that, even successful ones are often just a joke slapped on a coin that's an ephemeral moment in time. It won't last. But then there's things like Dogecoin that have a $59 billion market cap. So how do I reconcile that? In reality, I don't think it's a meme coin. It's what I would call a culture coin. And there is a difference. It's a little hard to put your finger on. It's like the difference between art and design. One is just something that looks nice, and one is a piece of the culture. I think in tokens, it stems from there being a real community, an identity, a shared set of values, of language, of purpose that drives beyond the coin. The coin is secondary in nature to the community. Dogecoin had that in 2014. I know because I was doing marketing with Dogecoin back in 2014, putting the Dogecoin logo on a NASCAR, sponsoring the Jamaican bobsled team for the Sochi Olympics, and hosting a 2 million Doge art contest. If Bitcoin has the Bitcoin pizza guy, Dogecoin has me spending 2 million Doge on an art contest. There was a real community of creators and builders, people having fun spending this joke of a coin building a community. Dogecoin lost that somewhere along the way and became this overly financialized asset where people only care about the money. But Dogecoin became the exception to the rule by being first. It has this historical armor that allows it to be an outlier that you cannot replicate, the same way that there will never be a second Bitcoin. But that's where Pudgy Penguins gets interesting. It didn't start with this token. Instead, they built a brand. Toys in Walmart, partnerships with major companies, a real business with real revenue, and stakeholders who loved the assets in spite of the price, who loved the community, who loved being a part of it. And even during the deepest depths of the bear market and the crypto winter, Pudgy Penguins was still there building, still having people connect. And so while other NFT projects were busy making Discord servers and promising the moon, Pudgy Penguins was quietly building a consumer empire with animated penguin stickers and retail plushies. And now they're about to flip the script on what a Web3 company can be. But first, let's go back to talking about the Pengu token. At a $2 billion market cap, some people think it's expensive. Those people are bad at math. Dogecoin 59 billion, Shiba 19 billion, Pepe 9.8 billion. What do these memes have in common? No real business, no mainstream user base, very little community, and the community that does exist mostly spams rocket emojis in a chat. Meanwhile, the Pudgy Penguins community has real IP, real builders, communities that are building things, participating, and is visible to a public presence. And you expect me to believe that's worth less than a JPEG of a cartoon frog? That's crazy talk. But here's where that gets even spicier. I don't think that the Pengu token should be looked at as just a meme coin. It's kind of a golden ticket to the Abstract ecosystem. Abstract, their upcoming blockchain, isn't trying to be some Ethereum killer. What they're doing is far more interesting. They're kind of trying to kill crypto itself. Well, not kill it so much as hide it. Think about it. Your mom doesn't know how SMTP works, but she can still send an email. The internet on the average day is hidden from mainstream users. Abstract wants to do the same thing with Web3 by focusing on building a consumer chain that is literally abstracted away from the interaction point of the consumer. The Abstract blockchain is focused on these mainstream users. It wants everything to be wrapped up in that Web2 feel. Let users log in with a Web2-like experience, akin to clicking on login with Google. And don't worry about trying to explain to a mainstream user what an AMM even is. Incentivize the building of games and social apps, content creators. You know, the things that normal people actually spend their time doing online. And sure, there will be DeFi apps. And crypto natives can still connect with EOA wallets and use them. They can connect with their MetaMask. But instead of fighting all the other L2s over the 5 dozen people who use AMMs on a daily basis, Abstract creates a blue ocean strategy by going after a new segment that everyone else continues to ignore or lack the expertise to capture. Because that's what Igloo and Pudgy Penguins have done since day one. While every other NFT project tried to sell you land or an overpriced digital game or other digital products to their high value customers, or burn 500K to $1 million per episode making an anime, Pudgy Penguins went and sold low-cost plushies in Walmart very successfully. They know what it means to be different. They know what it means to reach real consumers outside of this bubble. Now pay attention because I think this is where it gets good. Pengu isn't just a token, it's a test. It's a test of you. I would guess that how you handle your Pengu is going to have a lot to do with the kind of airdrops that you can look forward to from Abstract and in the Abstract ecosystem. Dump your Pengu early, sell your Pudgy Penguin right after collecting the airdrop. You're obviously mercenary capital and not a loyal contributor to an ecosystem. And now Igloo and every builder on Abstract knows exactly which Ethereum addresses and Solana addresses took part in that behavior. On the flip side, they also know who those loyal holders were, who's held the penguins for a long time, who has soul-bound tokens being part of the community, who when given this extra money and tokens held onto it and believed that it was going to go up. Who were those diamond-handed participants that while they claimed early, stayed within the ecosystem? So why wouldn't Abstract downrank the airdrop scores of mercenary capital? And why wouldn't they give bonus multipliers to loyal users who partook but stayed? That's the kind of people you want to attract and incentivize to be part of your ecosystem. It's a logical conclusion. Hell, if I was them, I would turn it into a CSV file listing the Pudgies, little Pudgies, ROGs, soulbound reward tokens, and Pengu allocation of each address and how much they dumped in the first 72 hours. And I'd make that available to any project launching on Abstract that wants to do an airdrop so they know exactly which users are the most likely to stay within the ecosystem. That's better for all of the applications that are building there, and it's better for the users. Think about it. Every new project that's launching there wants to attract the best users that give it the best value. But we continually have this problem of how do you avoid overpaying for mercenary capital that doesn't stick around? Now you've got the exact playbook and the exact addresses for those diamond-handed Pudgy holders. For loyal holders, that means a bigger slice of the pie because the airdrop is more concentrated on active participants. It also means there's going to be less dumping of that token, market caps are going to be higher, and therefore the airdrop is also going to be worth a higher dollar value. And I think that's one of the hidden values that most people aren't thinking about with Pengu. I think you're getting this multiplier effect by being an active holder that's going to pay dividends. Think about it. If you hold 50K of Pengu, you're not betting on just one token. You're not betting that just this token goes up, which it could. You're also betting on the allocation amount from multiple different projects who now see you as a valuable participant. And so I think there's the possibility that you can farm airdrops here that far outweigh the actual cost returns you could get on the token and lower your overall risk exposure. But why is Abstract interesting in the first place? What is yet another chain going to do for us? So here's what everybody else is missing. While every other L2 is fighting over scraps, which is what we call a red ocean business strategy, Abstract's playing a different game entirely and going after a new market, which is referred to as a blue ocean business strategy. You have to grow a new segment. It's more costly and harder to do, but if you have the expertise, you capitalize where no other competitors are. Now, the team behind this, Igloo, they're not crypto bros. They are experts at the consumer side. They understand consumers and reaching a mainstream audience better than anyone in the space. They don't want to optimize gas fees for degens swapping on an AMM. They want your grandmother to use the blockchain without knowing that she's using it. Okay, well, maybe not your grandmother, because that also wouldn't be very cool. But young teens who grew up playing Roblox and are kind of graduating out of that. They grew up in this digital ecosystem, paying for experiences. They understand digital currencies. They buy skins and digital items in Roblox and Fortnite. They understand what it means to be digital native, but they haven't been exposed to the world of crypto. That's their market. That's the market they can tap into better than anyone else. And it's a lucrative one. Hell, think of something like Roblox. While it's one of the most successful game/social platforms of all time, it might surprise you that it's worth $57 billion, putting most L1s and L2s in this space to absolute shame. And that's one ecosystem and one product with one demographic base. So their vision isn't just about getting the next billion-dollar AMM on their chain. It's about creating the social consumer layer that allows gaming experiences and digital social experiences to be interconnected. It's about capturing the audience that has grown up digital native but isn't yet crypto native. They don't necessarily want financial products pushed down their throat. They don't want to learn the complexities of dealing with gas tokens, but they do understand the value of digital experiences. And how do you do this? Well, I mean, for one, there's their wallet system. To a consumer, it looks more like an Instagram than a MetaMask. You can create smart wallets with social logins and abstract that all away from the users. And while many apps are doing things like that through Privy, Abstract wants to own that stack and push their own version of it, telling you log in with Abstract and making login with Abstract as commonplace as login with Google. And yet, don't worry, if you're a hardcore user, you can still use MetaMask and your EOA address and connect to the chain like any other EVM chain. But to the mainstream consumer, they'll get familiar with logging in as if they're logging into a website. And that alone is a powerful narrative. Beyond that, they're prioritizing social experiences, gaming experiences, content creators, and really focused on what do consumers want to use as web apps rather than what do financiers want to use on chain? And once again, DeFi will be there because a lot of us crypto natives are going to put it there. So it's kind of like having your cake and eating it too. If your cake was a penguin, please don't eat penguins. But that's the chain. What about the penguin IP? But that's the chain. What about the penguins themselves? What about that intellectual property? When you buy one of the Pudgy Penguin NFTs, you own a limited license to that specific penguin. But Igloo Inc. still owns the overall Pudgy Penguins brand and intellectual property. And the reality is, global character IP is worth a lot if you can make it something that a consumer is actually familiar with. I mean, Pokemon, Mickey Mouse, Winnie the Pooh, those are all brands that have done 40 billion to 100 billion in revenue. Not market cap valuations, but revenue. Hell, Hello Kitty does $250 million a year in merchandising and has done $30 billion lifetime, with most of their market being Japan and most of that revenue only coming from pillows and stuffed animals and figurines. No digital experiences, no games, nothing. And so if you wanted to buy the Hello Kitty brand, you'd be looking at a $10 billion deal easily, possibly even more. Now, my theory is that as the Pudgy Penguins brand grows and it becomes more familiar for people, especially as a young audience who has been attracted to the stickers and the plushies begins to grow into an older consumer who spends capital and has feelings of nostalgia for this brand, we're going to see Pudgy Penguins branch out into more and more media and entertainment opportunities. And I don't think Igloo Inc. has many exit opportunities. They can't really go public. That wouldn't make sense for the brand. And they can't sell out to a Disney or something like that because of all of the different complex tokens as a part of it. And so I think my personal theory is what we might see one day is there's the real possibility that this IP gets moved into a DAO, possibly owned by the Pengu token, and that the licensing rights and the royalties flow through this IP management DAO, probably on the Abstract blockchain. And that playbook can become a great place for other intellectual properties, as this DAO would have the expertise and the reach and the management capability, as well as the broad consumer buy-in to help launch brands, allowing Abstract not only to be a place where people consume various types of media and entertainment, but where they also own and manage that. And if brands have great intellectual property that they don't know how to grow and manage, there would be these DAOs that could manage it for them for a lucrative cut. Now, nothing like that has been discussed, but I think it is probably the natural evolution for the brand to go to a DAO, and why I think it's interesting that there is a token launched separately from Abstract for the Pudgy Penguins themselves that the team has retained a cut of. Because most meme coins don't retain a significant cut of the token, but Pengu did. It retained a cut for both Igloo current employees and future employees. And I think that's probably a signal that there's something more strategic and long-term with Pengu that hasn't even been discussed yet. But if this does continue to grow into a successful brand, and that intellectual property does end up within a DAO from the Pengu token, that could be worth billions in cash flow alone. Now let's go back to Abstract, because one of the biggest challenges every L2 has had is how do you get aligned value capture between validators and builders and consumers to make sure everyone is benefiting from the same set of priorities. And that's where Abstract's secret weapon comes in, governance. And stick with me, because I know governance is boring, but this is worth it. Unlike other chains which primarily just reward the validators, Abstract introduces the concept of panoramic governance. Its rewards come across three categories. The first two categories come from sequencer fees. And rather than just giving these sequencer fees to the validators, these are split between the validators and active governance participants who have met a threshold of activity level. So that means people like you and me who have tokens and are voting, as long as we're active enough, we get a reward of those sequencer fees for helping shape the direction of the chain. And then there's our third category, which is perhaps most important. And that's the builders. Most chains are in a constant fight between builders and validators. Since builders don't natively get a cut of the chain, but are creating the ecosystem value, they have to extract that value through complex fee systems. And that often creates a worse experience for the consumer. And if the consumer experience is worse, they're less likely to use the chain, and therefore the validators get less sequencer revenue. So a poor user interface hurts everybody. But how do we fix this? Well, that's where that third category comes in, the builder rewards. Every epoch, the emissions of the abstract token will go out to builders, as voted on by governance. People who currently hold the token will vote which apps are the most important to provide a cut of the funding to. In turn, these apps will get some of the governance token, and if they're active in voting, then in future that governance token will give them a cut of sequencer revenues, allowing each app to begin to take a cut of the collective value of the chain's revenue without extracting those fees directly from the user. This not only aligns the incentive between the three different pillars, the validators, the governance voters, and the builders, it unlocks incredible new user experience opportunities and business models altogether. Think about it. Think about an AMM that doesn't need to charge a fee. It has a 0% swap fee because it knows if it can drive the most volume, if it can attract the most users to abstract and therefore have more gas spent on abstract than anywhere else, it gets a cut of those sequencer fees and in turn grows the entire ecosystem, benefiting it. And if it does that, governance and validators are more likely to vote for it to get a larger share of the abstract token emissions that happen each epoch, giving it a larger slice of the sequencer revenues growing forward, because it delayed the opportunity to extract fees from the users today to own a piece of the ecosystem tomorrow, allowing a better experience, a product experience that other chains and other apps couldn't compete with. But it also means that systems like paymasters or systems that are willing to pay the gas for their users and abstract that away when using a smart wallet will allow consumers to interact with the abstract chain without having to worry about gas tokens and refilling wallets and all that complexity. They can just make their transactions directly. And these applications can make up for that on the back end by getting a cut of the revenue moving forward. That's the kind of powerful integration that you really need to reach mainstream consumers. If you're using a Facebook clone, you don't want to have to worry about how much gas you have in your wallet every time you post. But that money still needs to be made up somewhere. Now it can be abstracted away, and that's amazing. That is a beautiful alignment of incentives. It's art. It's like watching a penguin waddle, but there's profit involved, so it's also much better than that. Now let's talk about numbers here for a moment. If we look at other L2s like Optimism, they've got a $3 billion valuation right now today, but they don't even share sequencer fees, and their token is put out in grant batches, which are often sold to fund operations, creating a large amount of sell pressure. It's also focused on the same set of DeFi users as everybody else, and a lot of that sequencer value is getting pushed over to Base as part of their superchain, because the reality is that Base has the best way to bring those set of users, those DeFi consumer users, online right now through Coinbase. And when we're looking at sequencer fees, if we take the sequencer fees of L2s like Base, or even alt L1s such as Tron and the overall traffic and gas spend they have, Abstract could be looking at distributing somewhere between $200 million and $500 million a year to all of these different projects that build on their chain. To put that in perspective, that's the same amount on average each year that Roblox has spent paying creators to build their entire $57 billion ecosystem, where all the games and items and cosmetics and experiences on Roblox are built from that budget. These are powerful incentives, and it doesn't matter what you create. If you create and bring value to Abstract in any form, you're getting a cut of that pie, and it's not a small pie. So where does that put us? I mean, near term, I think it lands in the kind of range of a Toncoin, a Cardano, maybe even a Tron. Not right now at launch, but at the end of this first bull cycle, sure. I don't think these $15 to $20 billion market caps are out of the question for that first cycle at all. And I think longer term, it starts to be able to compete with alternative L1s like Binance's BSC chain or Solana, because I don't see any reason that you can't capture a great consumer experience when you're repetitively providing this level of payouts to incentivize creators. You're going to get a win. At the end of the day, we're talking about multiple billionaires and several hundred millionaires being created from creator payments from sequencer fees over the next decade. That's astonishing. You can build a unicorn business on top of another business's payout structure. To do that in any other ecosystem, you need permission. You need a grants committee to approve you. You need a VC to invest in you. In Abstract, you can do it, have consumers vote for you, and get a cut of that pie without anybody's permission. And that is going to be the difference. That enablement of builders is what will put Abstract front and center over a number of other L2s. But look, I need to be clear. This is crypto. It's risky. It's also NFTs and meme coins, which are 10 times riskier. It's the riskiest of risky stuff, and it's so risky, I normally don't even talk about these categories as a whole because I don't think it's responsible to do. So if you don't have the stomach for risk, or if you don't have the portfolio diversity to absorb risk, don't do it. If you can't handle drawdowns, if you can't stay up to date with the market developments, don't do it. If you can't react to changing market conditions and updates from a project that may change the overall direction, don't touch the thing. No one should tell you it's a sure thing. No one should tell you that you're going to make a ton of money buying these things. I personally think the risk reward ratio is there, but I'm also the kind of investor that can afford to be wrong and significantly wrong once in a while. Unlike many other opportunities, you also have the opportunity to not invest with money, but invest with time here. There are other ways to play this without putting your money on the line. And while if successful, they may not be as lucrative, they're definitely safer. So if you can't stomach buying in, that's fine. Just wait for Abstract to launch. Take part in governance. Volunteer with different projects. Get involved. Farm the airdrops. Earn your seat at the table. An ecosystem that's so focused on making sure builders are aligned and everyone gets rewarded and gets to partake in the system will have tremendous amounts of opportunities just by showing up. I don't think it's unreasonable that someone who's very active and involved and a genuine user getting involved rather than just a mercenary farmer could farm up to 100K in abstract airdrops over the next cycle. That is a reasonable amount to gain from that ecosystem by being an active and involved participant, investing your time and effort without having to put capital on the line. So just be involved, be smart, and stick to the risk that's right for you and what you understand, not what anyone else is telling you to do, including me. Overall, just pay attention. Because at the end of the day, while everybody else is running around arguing what dog coin is best or what the latest edgelord meme is on Pump Fun, these penguins are quietly building a consumer empire that I think, personally, will be worth tens of billions of dollars one day. So what do you think? Are these penguins really the future of crypto, or have I finally lost my mind? Drop a comment below and let me know your thoughts. And remember, this isn't financial advice. I'm just a guy who likes penguins and making money, but mostly penguins. And if you like penguins or you like videos deep diving on finance and crypto, be sure to hit the subscribe button so that you can always get the latest. And I'll see you in the next one, where hopefully we're all retired on private penguin islands.